And now let's first talk about the markets. Now, markets have turned cold, responding less to diplomatic moves and pivoting to AI and other growth movers. To tell us more on this, we now cut across to Adya Juneja for the latest. Adya, take us not only through the numbers but also the market impact, especially for Asian indices. Even in the US, the markets have rallied, and it looks like a rally across the board. S&P 500, Nasdaq, Nikkei 225 all have reached record highs. Even the Indian markets have opened on a high note. Take us through all of the details.
Right, Kanishka. Well, global markets right now are sending a clear signal. Investors are increasingly betting that tensions in West Asia may cool down even as the situation on the ground remains fluid. From the US to Asia, stocks are rallying sharply with S&P 500 and Nasdaq hitting fresh record highs on Wednesday, mirroring that optimism. Asian benchmarks extended gains in early trade as, just like you said before, Japan's Nikkei surged to new highs today, while Taiwan's market value topped $4 trillion, outpacing UK's FTSE. That even as the uncertainty surrounding the West Asia conflict remains. When the Iran war started, Kanishka, well, S&P 500 crashed 8.5%, wiping out $5.3 trillion in market value. Now, from March 31st low, the benchmark is up almost 12%, adding $6.5 trillion back. And the strangest thing here is the war is not over. Negotiations have failed once, and the UK's blockade of Iranian ports are still active and intact. Wall Street moves suggest the bigger and longer-term picture is more palatable. From a cold market mindset, even if Israel and Iran were to launch munitions at each other, markets won't care. Markets will care if the US is in the game and ramping up the risk. Now, it seems that the US prefers an off-ramp. However, things could change very quickly in the coming days. While headlines offer little reason for optimism, markets seem to take more of a wait-and-see approach rather than musing what will happen. If anything, the glass is still half full when looking at risk assets. Now, the shift is being driven by expectations of a possible diplomatic breakthrough between Washington and Tehran. And at the same time, a key pressure point, which is oil, is beginning to ease. Now, Brent crude prices have pulled back significantly from recent highs, signaling reduced fears of prolonged supply disruption through the Strait of Hormuz. Well, that's easing inflation concerns and boosting risk appetite. And globally, crude has fallen sharply from nearly $120 per barrel to about $94 per barrel. And analysts are betting oil to fall below $90 soon, provided there is still no escalation. Currencies are also reflecting the same change. The US dollar is weakening. Emerging market assets, including Indian stocks, are seeing renewed foreign inflows. And after weeks of reacting sharply to every headline, global markets seem to choose stability, almost as if markets have decided to take a pause and reassess the bigger picture. Kanishka.
Right, thanks Adya for taking us through all of those details. So that's all about the markets.